Hey everybody, Gary with Basecamp Trading. Take a look at how we take our higher time frame signals and then drill down into a smaller time frame chart to take a lower risk entry. This is our 30-minute chart in Crude. And you can see that Crude was bearish in the overnight, put in this reversal doji, triggered it back to the upside, and then just really for the most part went sideways. Pushed up. Again, the 50 EMA is significant on the, in fact, the 50 and the 200 are both significant on these 30-minute charts because you can see that Crude popped below the 200, back above it, popped under it, back above it, under it, back above it, under it, above it, under it, every time breaking under it, back above it. But then the 50 EMA is significant as well. You can see that went up there, touched it, rejected, broke above it, rejected, and then we kind of chopped sideways, broke under the 200 and then back above it, broke under 200 again, back above it. But this is the bar that we were paying attention to this afternoon. Crude had pushed down, broke underneath 200, and then left this really big bottoming tail, and the entire body of this bar was buying. So that's a strong reversal hammer, and that's all buying. And while that set up a 30-minute bull flag, it's really not a good bull flag setup, really. I mean, the pull down retraced way more than 50% of the original up move. It was all consolidation. I mean, not really a good bull flag, even though our indicator is giving us a bull flag indication. What is significant here is that this is a hammer. We left this bottoming tail, entire body of this bar is buying. And then you can see on MQ momentum, the histograms never went negative. And so this was also a bullish inflection. So we had a hammer, a bullish inflection, all being triggered by this bar, of course. So this bar closed as a hammer, and then we have this bullish inflection and the hammer all being triggered by this bar right here. And then as you can see, Crude made a nice push to the upside. Well, typically, if we were going to take that as an actual entry, when that triggered, that bar triggered above 3807, our stop would have to be down below 37.72. I mean, that's close to a 40-tick stop. We don't want a 40-tick stop. So we now have a trigger off of our 30-minute chart, and then we'll drill down into our Unirenko chart and see if we can get an entry that gives us a lower risk entry. And this is what we had going on with our Renko chart. We had that pullback. This is where that big bottoming tail was being left on the 30-minute chart. And that hammer actually triggered up in here. Well, this is not really any kind of a setup. We don't have any kind of a setup right here. We pushed up, but then we made the pullback, set up our wick off the 18. All of our moving averages are now in alignment. Prices above the cloud, above the smooth 50. We don't have a great momentum reset. This is the one kind of negative to this setup right here. But the higher time frame trumps the shorter time frame. And we triggered that 30-minute hammer. That next bar was a very strong, bullish 30-minute bar. It actually closed above the 50 EMA, which had been supplying resistance on the 30-minute chart. And so we had a strong, bullish 30-minute chart going. And so we were looking for a way to take advantage of the signal off the 30-minute chart to where we could have a lower risk entry. So we take this wick off the 18. Here we only have about a 10-tick risk versus a 40-tick risk. Now granted, we didn't catch the exact entry on the top of the hammer, but still a good setup with good potential. This bar triggers to the upside. Our initial target is actually up at 38.69. We hit that. We're able to take profits, and that was a nice move too, up to 38.69. That's a move from 38.27 all the way up to 38.69. So that's a nice $400 per contract move to the upside. We pulled back, broke a back above the moving averages, broke back above the cloud, and then we pulled back, and then we set up our up, down, up pattern. So we had a nice reentry because our next target in crude was actually as high as 39.11. Now we didn't quite get there. The high ended up being 39.10, but still not bad. This bar triggered above 38.70. We were looking for 39.11. Another $300 per contract to the upside here on crude. So a couple really nice afternoon trades in crude using our shorter time frame charts based off of a trigger from our higher time frame chart.